Now it's officially that time of year once again where the Schwab US Dividend Equity ETF, known as ticker symbol SCHD, does go through its reconstitution, which it does do once a year, where certain names within SCHD are no longer a part of the underlying index and certain names are also added. Now this can definitely shake things up a little bit for one of our favorite dividend growth ETFs. But the reality is that because this ETF tracks the Dow Jones US Dividend 100 Index, which has an algorithmic approach on stock picking basically, meaning that there's not a fund manager hand-picking names based off of things like if they like them or not. The stock picking is based on multiple different screenings, and at least up until this point over the past decade plus, it's never led investors wrong. Now in this video, you guys guessed it, we're going to be talking about the 2025 Reconstitution. I'm going to be sharing with you guys all the new stocks and some of the ones that left. And then later towards the end of the video, I'm going to share with you my thoughts on some of the new additions and where I think SCHD is going to head to from here. So if this interests you at all, especially if you hold on to shares of SCHD, make sure to stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Now I came across this article from the Sunday Investor where they broke down the complete guide to the March 2025 Index Reconstitution, and it seems like dividend investors across the internet as of today are going crazy about this. So it says SCHD's index reconstituted at the close of business on Friday, resulting in 20 additions and 17 deletions. The index deleted Pfizer and BlackRock, while the addition of ConocoPhillips is SCHD's new top holdings. Also important to note, the total energy sector exposure is now above 20%, which raises some concerns regarding dividend growth and consistency. My backtest reveals a new portfolio is designed for high inflation years like 2022. SCHD's index yield dropped to 0.07%, and shareholders should earn about 3.81% at current prices. Importantly though, SCHD retained its quality, value, and dividend growth advantages over other dividend ETFs. However, weak sales and earning growth remind us that SCHD is not perfect and investors should seek complementary funds. In addition, SCHD's high 63% dividend payout ratio was a big disappointment. SCHD's index reconstitution reinforced my reasons for keeping it as a long-term investment. However, I'm hesitant to back up the truck due to earnings growth and dividend safety concerns. Therefore, I'm assigning this as a hold rating. Now, because of what SCHD offers as far as exposure to around the 100 different stocks within the underlying index, the fact that this ETF offers around a 3.5% to 4% initial dividend yield depending on where you bought into it, and this ETF has offered some growth and dividend growth historically, this ETF in my opinion is very close to the perfect dividend growth ETF and sort of a one-size-fits-all ETF that would sort of solve for most of what most dividend investors are looking for. But even knowing this ETF offers quite a bit, it still is not an ETF that I would want to hold all alone in a portfolio, which is why I own several other ETFs, as you guys know. Now, for those of you guys that don't know the reconstitution process and how it works, it says each year on the third Friday in March, the Dow Jones US Dividend 100 Index reconstitutes, with changes taking place the affecting next Monday. That day is today, and based on the algorithm, the index adds and deletes stocks according to the criteria below. The order of operations is crucial as the index screens for dividend consistency, things like liquidity and size first, then dividend yield, and then 4 fundamental metrics that cover quality, dividend growth, and dividend yield once again. The index universe is all components of the Dow Jones US Broad Stock Market Index, excluding REITs. For practical purposes, you can think of the index as the 2,500 largest US securities by market capitalization, and the index is tracked by the Schwab US Broad Market ETF, or SCHB. The index filters out stocks with float-adjusted market capitalizations less than 500 million, 3-month average daily value traded less than 2 million, and less than 10 years of consecutive years of dividend payments, not consecutive years of growth. Now let's pause to understand what happened so far. Excluding REITs filters out about 250 securities, while the market cap and liquidity screens filter out approximately 400 more. Then the 10-year dividend consistency screens narrows, and the index universe is down to around 700. So that fast, because of these multiple different screenings, this is how fast the massive amount of different potential options are screened down, which is again why I love the fact that this ETF uses this method. With financials comprised about 30% of the remaining universe, it's a big chunk and explains why so many banks regularly qualify. The next step is to order these remaining stocks by their indicated dividend yield and remove the bottom 50%. At this point, the minimum dividend yield is about 2.25% based on prices as of March 21, though the threshold is actually slightly different since the reference date was 1 month prior. From there, the index universe is further narrowed to approximately 350, and this step means that any current constituents with yield below the threshold is no longer eligible. Next, what happens is the index calculates composite scores by the remaining 350 securities based on 4 fundamental statistics, metrics like free cash flow divided by total debt, return on equity, indicated dividend yield, and 5-year dividend growth rate, calculated as follows. Now, to get right into it, the SCHD Index Reconstitution, 20 editions. On March 21st, SCHD only held 97 stocks, 3 less than its usual 100. The reason is that the MDC Holdings and Heartland Financial USA were acquired in April 2024 and January 2025, while Premier Financial completed its merger with the West Banco or WSBC about 3 weeks ago. Notably, the index does not replace stocks removed throughout the year, but effective Monday, 20 stocks will be added to SCHD's portfolio, with weights totaling 17.95% as follows. So here are the new additions. We have ticker symbol COP, which is 4.59%. This is in the energy space. We have Merck, 4.05%. We have SLB, 2.3%. They also added Target, General Mills, we have ADM, HAL, OVV, AFG, ALV, FMC. Then the smaller last additions are names like MC, FLO, MUR, FHI, SIG, IPAR, CNA, EBF, and THFF. Now, some of the names that were deleted from SCHD also very important. Names like Pfizer is no longer a part of it. We have BlackRock leaving. We have US Bancorp. Then we have MTB leaving, HBAM. We have TPR. Key's no longer a part of it. CHRW, DKS. We have ZION, HRB, SNB, BOH, LEG is no longer a part. And lastly, CBRL, HFWA, and GES. Now, another thing that's very important to a lot of you guys and me as well, because I currently hold well over 2,000 shares of this ETF, and I am sort of banking on this ETF to pay me a lot of dividend income over the next few decades and pay me more and more, hopefully. It says SCHD's index yield changes from 3.94% to 3.87%. SCHD's index yields decreased a little bit after accounting the fund's low 0.06% expense ratio. Shareholders should net around 3.81% at current prices though. Often shareholders can expect the index yield to increase each year because of the reconstitution process removes low yielding stocks. However, Pfizer's removal will come as a blow, since its indicated dividend yield is 6.54%. In addition, since higher share prices put downward pressure on dividend yields, you could see the index minimum yield threshold decrease in a strong bull markets for value stocks. Still, SCHD has retained its yield advantage over its peers after adjusting the index yields for FDVV, for example, VYM, and DGRO. By their expense ratios, the yields are only 3.36%, 2.73%, and 2.29% respectively. Also important to note, dividend growth. SCHD's new components have increased dividends by an annualized 7.85% in the last 5 years, slightly better than the previous portfolio's 7.52% rate. I call this organic dividend growth, and it's what you would have experienced had you simply owned this basket of individual stocks 5 years ago and frequently rebalanced to these weightings. The addition of ConocoPhillips is a huge contributor, and its 5-year annualized dividend growth rate is 16.56%. However, that's highly skewed due to its 146.05% single-year increase back a few years ago. And as it's shown, the payments have decreased in each of the last 2 years. So once again, shout out to the Sunday Investor on SeekingAlpha.com. That was an absolutely great breakdown of the March 2025 Index Reconstitution. So what are my thoughts on SCHD's new additions to the portfolio and some of the names that left? And where do we go from here as holders of one of the best dividend growth ETFs across the entire market, in my opinion? Well, honestly, you really have to just trust the process when it comes to an ETF that does follow such strict guidelines that have at least historically offered massive performance year after year, like I said. Now, the next dividend is going to be announced in just a few days, maybe tomorrow or the next day, so we're going to have to wait and see what happens on that front. But overall, I'm still as bullish as ever with this ETF because the underlying methodology, this ETF is in my portfolio for the long term. So now that we talked about the 2025 Reconstitution, I share with you guys some of the names that are no longer a part of the ETF, some brand new names that are now a part of it, and the most recent changes in the dividend yield. I lastly want to hear from you guys down below. When it comes to SCHD in your portfolio, what are your thoughts on the most recent Reconstitution? Like I said, for me personally, not all that many thoughts at all. I'm trusting the process. I know this happens once a year, and it has not let down SCHD ever since. But let me know what your guys' honest thoughts are down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.